E-commerce owners, if you're unsure about how to calculate your cost of goods sold with these recent tariffs, then watch this video. Real quick, my name is Arthur Glinken and I'm a certified advanced pro advisor inside of QuickBooks Online. I'm also the co-owner of S&G Bookkeeping, an accounting and bookkeeping firm that works specifically with e-commerce stores, so we've been doing this a lot lately. By the end of this video, you'll know exactly how to treat these tariffs, and then I'll also share with you the Google Sheet template I use in this video so you can calculate cost of goods sold yourself. So when it comes to calculating your cost of goods sold, you not only have to take into account the actual cost of your items, but any additional costs needed to get those items over to you as well, like tariffs and freight and fees. So for example, if we bought $10,000 worth of products and we also had to pay $2,000 of tariffs to get those products shipped into us, then our total inventory cost is going to be $12,000. And that's going to transfer over to cost of goods sold as we actually sell those products in the future. Now, many e-commerce owners actually make the mistake of immediately expensing these tariffs and inbound fees rather than adding them to your inventory cost and then expensing them over cost of goods sold. Now, this actually distorts your gross margin because your cost of goods sold number doesn't include these additional tariff and inbound fees, even though it should be including them. So the question is, how do we actually allocate all these additional fees like tariffs and inbound fees to our products so they get counted in cost of goods sold? And the answer is it depends, because you actually have a couple different choices. You could allocate these extra fees based on the value of the products, weight of the product, size of the products, and a couple different things. Personally, I just like looking at the value of the products because that's the easiest way to track how much additional cost of goods sold that these fees are going to add to each item. But regardless, either choice is fine as long as you're consistent with it and stick with it in the long run. So in our $10,000 inventory purchase example from before, let's just say that one of our items cost $1,000, which is 10% of the total shipment. We would basically take that $2,000 tariff fee that we had and allocate 10% of that, which is $200, directly to that one item. So the cost of that item would not be $1,000. It would be $1,000 plus 10% of our $2,000 tariff, which is $200, giving us a total cost of $1,200. But let me break this down in a spreadsheet and make it a little bit easier for you to visualize. So here we have that tariff and import fee sheet that I was talking about below. I'll also have this pinned down in that first comment below and in the description as well. So you can basically just make a copy of this, use it for your own business, so you can properly allocate these freight in and tariff costs to your product as well. So as you can see, it's nothing too crazy. I just set up a sheet with a couple of formulas, and you basically just plug your numbers into the highlighted boxes. So I already set this up, give us some simple numbers to help show you how it works. But you basically just enter your SKUs or product names on this leftmost column right there. Enter the amount of units you purchase, cost per unit. That'll give you your total SKU cost. So we have 100 units at $2 equals $200 in total SKU cost. And it'll basically just add up this whole column right there and give us the total inventory cost. In this case, it's $400. And then this is something that you have to enter in manually right here. You just look at any invoice or bill that you get and then enter the total freight cost and then the total tariff cost as well. So we're going to allocate this based on the value of the products. Like I mentioned, you have a choice. It could be value, weight, size in terms of volume of the product as well. I think like I mentioned, the cost or the value of each unit is the best way to do it because for the most part, all of your bills are going to have the cost per unit. So you might as well use that information. You already have it. You don't have to calculate the weight or anything like that unless it's given to you on an invoice. So I think this is the easiest way to do it. But basically, I have this column set up called unit percentage of total cost. So we can see that one of these units of SKU1, which costs $2, is about 0.5% of our total inventory cost. So basically just take $2 divided by 400, 2 divided by 400, giving us 0.5%. So for each item that we sell, we want to allocate 0.5% of this total freight in and tariff cost as well. So I have a separate column set up for freight in and then one for tariff cost. So basically what you would do is take this total tariff cost, multiply it by the total unit percentage of this one item for the SKU, and then giving us 25 cents just for the freight in. And then you would do the same thing for the tariff. So then you would take 0.5% of $75, giving us 38 cents, 37.5. But obviously it's just rounded to 38. And now what you would do is have this column here at the end, additional cost of goods sold per unit. That's what COGS stands for. And it basically adds up these two values right here. So 25 cents plus 38 cents. So now that we have this additional COGS right here, what we can do is take this cost per unit of $2, add 63 cents to it, which is our additional cost of goods sold due to these freight in and tariff costs. And then we would update QuickBooks Online any bills that we have entered from vendors based specifically on this additional cost of goods sold. So let me hop into QuickBooks Online and I'll show you exactly how that looks like. So now if we open up that original bill that we entered in QuickBooks Online, we can see, let's just assume that these sprinkler heads are SKU number 1 that we had on the sheet, and then these sprinkler pipes are SKU number 2. So for SKU number 1, we had 100 of them for $2 a pop, and then for SKU 200 at $1 a pop. So what we're going to do now is actually make a little bit of a change to this rate right here, because in our sheet, as you can see, for SKU 1, we had an additional cost of goods sold per unit of 63 cents. We're going to add that 63 cent value directly to this bill. And then we're going to go back to our sheet and look at that same number for SKU number 2. We can see that obviously all these numbers are entered, giving us an additional cost of goods sold of 31 cents per unit. So we're going to do the same thing and add 31 cents. So from $2 to $2.63, and then from $1 to $1.31. Now we can just go down on this arrow and then press save and close. Now what happens is that anytime these items are actually sold, we make a sales receipt, we make an invoice inside of QuickBooks Online. QuickBooks Online will automatically update the cost of goods sold directly for the price that we entered. So instead of it being $2 as cost of goods sold, it's going to be $2.63 for SKU number 1. So it takes care of that automatically, making it a lot easier for you as the e-commerce owner. So I know that this might seem like a lot, but trust me, resisting the temptation to just take the easy way out and expense these costs right away will actually help you get more accurate financial statements and better understand your gross margins as well. Whichever allocation method you choose, whether it's value, size, or weight of your products or something else, just make sure you pick one and you're consistent with it, and then you'll be all good. So if you want this dialed in without all of the guesswork, then just click on the first link down in the description or in the pinned comment below as well. I'll basically just analyze your QuickBooks Online file and take a look at your cost of goods sold, inventory tracking, and any other issues that you might be having inside of QuickBooks Online. And then I'll also give you a 1-page plan to fix it if you do have any of those issues. So we have limited spots. We got 5 spots this week, so make sure you book your audit before we run out. As always, thank you so much for watching, and stay tuned for another video about e-commerce bookkeeping tips and tricks coming up in the next week. See ya.